Welcome back to Alpha Recap, your end-of-day wrap from stockalpha.ai. We'll break down the big moves, the surprises, and what analysts were watching. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. The market closed, and it was one of those days where the headlines did the steering, especially in tech and autos.
So, quick snapshot to set the stage. The S&P 500 closed down about 0.1%. The Nasdaq 100 fell about 1.7%, and the small-cap Russell 2000 was down about 0.5%. At first glance, those moves look modest. But beneath the surface, there was clear concentration risk. A handful of big names drove headline performance while the rest of the market lagged.
Right. You could say it was a classic concentration repricing. The S&P barely budged because a few giants held the line. But the Nasdaq told the fuller story of growth names getting marked down.
So, what really stands out here is the mix of company-level news and broader macro pressure, correct?
Exactly. We had Tesla reporting stronger than expected deliveries. Apple dominated the headlines with foldable iPhone chatter. And then a bunch of semiconductors and software names took hits as investors stepped back from forward expectations.
Tell me about Tesla first. That delivery beat helped the auto group?
Yeah, that tracks. Tesla's delivery momentum beat expectations, which lifted EV suppliers and parts of the electric vehicle ecosystem intraday. It was a localized positive in a day that otherwise leaned toward risk-off for growth-sensitive areas.
And Apple. There was a lot of chatter about a foldable model. How did that factor into the take?
Apple's product cycle optimism acted almost like ballast. Because of its size in the index, any strength in Apple can mute broader index weakness. Analysts were talking about potential upside from a foldable iPhone narrative, which helped limit S&P losses even as breadth weakened.
The number that really caught our eye was the Nasdaq 100's drop, about 1.7%, which shows the more concentrated nature of this move.
And when the Nasdaq drops that much while the S&P barely moves, it's a signal that a small group of mega-cap growth names are repricing, or that investors are taking profits after a long run.
Right. And the other thing is sector dispersion. Semiconductors and software were hit harder than headline hardware names.
Analysts noted that long-duration assets, tech names whose valuations depend heavily on future earnings, are sensitive to any shift in rate expectations. With inflation showing mixed signs and the labor market still resilient, the probability of near-term rate cuts has faded a bit, and that compresses multiples.
So essentially, higher for longer rate talk squashed some of the froth.
Investors rebalanced towards cyclicals and names with nearer-term cash flows. That's why we saw pockets of strength outside pure growth.
Let's run through the sector-by-sector color. Start with autos and consumer discretionary.
Tesla's beat was the headline in autos. It lifted suppliers and some EV tech names. But legacy automakers faced pain. Ford reported a disappointing second-quarter sales update tied to supplier issues with its F-Series, and that pressured traditional auto shares. Rivian raised its 2026 delivery outlook, which caused dispersion within the group.
Mixed messages within the same sector.
Exactly. And then in tech, software and chip names were where the market felt the squeeze. Some chip design tools and AI enablement names showed resilience based on structural stories. But overall, the tech-heavy index took the brunt.
Not a great day for chip stocks generally.
No, and to add to that, communications and media were split. Streaming and content-adjacent names had pockets of strength, while legacy advertisers and cable-related firms lagged. Utilities tied to renewables and storage did well. Investors favored regulated cash flows amid rate uncertainty.
Materials, mining, and energy. Any notable themes there?
Yes. Reports of new capacity and big deals lifted select miners. Energy fundamentals looked a touch tighter, which supported parts of the energy complex. And metals used in electrification stayed in focus, as EV demand is still part of the story.
Cannabis popped up in the recap too. What was driving that?
There's renewed chatter about federal rescheduling, and that pushed cannabis names and ancillary businesses. Analysts were quick to remind listeners that political progress or regulatory clarity would be a key swing factor for that group.
Quick reactions, short takes. Right.
Yeah, that tracks.
Let's touch on a few individual names without recommending anything. Tesla's delivery beat helped supplier stocks. Apple's rumor-driven strength did index heavy lifting. Ford's sales miss highlighted execution risk. Rivian raised its outlook, which was a positive operational signal. And a handful of industrials and energy transition names drew interest on fundamental beats or guidance.
Exactly. Stocks like those generate sector dispersion, and traders were sorting winners from those that need clearer execution. For example, some industrial equipment names that beat on GAAP earnings got noticed, while challengers in the EV space continued to face valuation pressure and execution scrutiny.
Crypto and retail got a line in the piece as well.
Institutional adoption headlines in crypto were constructive, but volatility is still the governing theme. For retailers, announcements of AI partnerships created momentum for some names, though analysts emphasized execution over announcements when judging long-term impact.
I mean, when you step back and look at this, breadth was the real underlying issue.
Yes, market breadth was fragile. That small set of mega-cap winners has dominated returns, masking the fact that fewer stocks were participating in the rally. If breadth continues to tighten, headline indices can stay range-bound while internal risk rises.
What did analysts say about the Fed backdrop?
Analysts noted the Fed's dilemma. Cooler inflation prints would support eventual easing, but resilient labor and growth make cuts less likely in the near term. That keeps pressure on long-duration growth names and tends to favor cyclicals and value in the short run.
So what are the key things to watch next session?
1. Earnings and guidance, continued dispersion. 2. Technical levels and breadth for the Nasdaq and S&P. 3. Macro prints, inflation, payrolls, and Fed speak. 4. Sector catalysts like auto delivery updates, commodity signals for materials and energy, and any regulatory moves for niche groups like cannabis.
Quick check. Sentiment overall?
Mixed. Not a panic, not a full risk on. The tape reminded everyone that concentration can hide vulnerability. Analysts suggested focusing on diversification, liquidity, and position sizing, because news flow can cause quick swings.
Honestly, I was a bit surprised by how much Apple's chatter masked broader weakness.
It happens. A heavyweight can carry an index for a day, and that can be misleading if you don't look under the hood.
All right, let's close with 3 clear takeaways.
1. Headline indices hid internal weakness. Watch breadth. 2. Growth and long-duration tech names were repriced as rate expectations shifted. 3. Company-specific catalysts, deliveries, product cycle news, and guidance will keep driving dispersion.
Final reminder. This is market analysis for informational purposes only. We are not recommending the purchase, sale, or holding of any security, and none of this is personalized investment advice. Analysts note that diversification and attention to liquidity and position sizing tend to matter in these environments.
And remember, the trading day was over when we discussed these moves. Everything we covered was historical market action and commentary on how the market digested news.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for joining us on Alpha Recap. We'll be back with more after the next close.